Hey guys, welcome back to Zach Going Fire. Today is March 3rd. I'll be showing you my monthly net worth update, and in the second half of the video, after about 6.5 minutes, I'll be breaking down exactly what my portfolio holds and why I have deviated from my investing strategies where I was following Jason Kelly's income sig plan. The market has been very volatile in the last couple of days, and I am not worried one bit, and I think you'll be able to see why when you see my holdings. All right, so jumping right into the spreadsheet with my numbers, we're going to look at starting with the cash balance we have. We have $29,549 with Capital One. That is divided up into multiple sinking funds, some CDs we have, emergency fund. Then we have $264 with our PayPal balance. It's a debit card where we get 5% cash back on different categories each month. We have $22 we've earned in upside. We've got $372 with the in-kind app we use for going out to eat. Then I've added up the liabilities, $3,000 loan from M1 for the margin, and then we have a few small credit card balances we pay off every week, so we're subtracting that out. That gives us a total of $26,564 in cash. So I'm going to take that number and plug it in here, $26,564, to the cash balance with Projection Lab, 26,500. Then we're going to go ahead and next we'll look at our vehicles. So we have the real assets here. We've got the Prius. The current value on that is $10,285, and we use Kelley Blue Book to get our vehicle values every month. So the Mustang value right now is $15,060. We do plan on selling those later this year as we retire and sell everything to go into our nomadic travels. So next we'll go ahead and pull up our investment accounts. We'll start down here at the bottom. If you've been following me, you know that we had an HSA for Mindy and we spent that down to zero. So I just went ahead and removed that out of this, so it's no longer showing. Mindy has her traditional IRA with M1. So that's actually been performing really well this year. We've got that in following Jason Kelly's 6 SIG plan. So that's at $16,756. Jason Kelly's 6 SIG plan uses a leveraged fund, and it invests in medium cap stocks, in which those have been performing really well in the last couple of months. Mindy's Roth balance with M1, $292,163. That is in Jason Kelly's income SIG plan, and his income SIG plan I've deviated from a little bit, so we'll go into details about that later on. With my IRA, my traditional IRA with M1, that's also with Jason Kelly's 6 SIG plan, and it's been performing really well this year, just like Mindy's, $11,430. My Roth with M1, let's see, it's $500,655. And my Roth is same as with Mindy's Roth. It's following Jason Kelly's income SIG plan, which we've changed some. My 401k, which I'm not currently contributing to, is following Jason Kelly's 3 SIG plan. It's $1,710. It's performed pretty well this year so far. My HSA with McLean, I am contributing to that. It is not invested. We're using that for medical expenses. It's at $1,456. My HSA with Fidelity, that is invested in Jason Kelly's 6 SIG plan, and it's been doing great this year, $19,209. The Fidelity 100 shares of Carnival that we have in Fidelity, that is $3,170. Carnival's been doing great lately. And then we have our taxable bridge account with M1, and that also is following a modified version of Jason Kelly's income SIG plan. That's at $159,427. So that brings our net worth to $1.06 million. Let's take a look at how this looks on my phone using the Wealth Plus app you see here. This is how I've been recording my net worth updates every month for years. If you use this app, of course, you do not have to do it every month. You can do it quarterly or however often you want to do it. I like to do mine on the first of every month, as you can see this going back for years. This month, with $1,057,885, our net worth is down by $27,400 for the month, which is a decrease of 2.5%. The markets were down this past month, and we have been starting to spend down on some of our savings and booking some future travel as we plan on retiring in March. Let's go into the charts here so you can see how this has performed, how some of our investments have performed. You can see where the cash balance in our Capital One has we've been spending down on that. Let's see, if I put this to year to date, you can see it's down about 14.5% or just over $5,000. And if we go to our my HSA, which is invested with Jason Kelly's 6 Sig plan, over the last 12 months, it's up over 23%. So far this year, it's up 13%. With the biggest account that I have is my Roth account. It's at $500,655. Over the last year, it's up 36%. Most of this sharp growth here was when we were still doing his Jason Kelly's 9 Sig plan. And then around August through October, we were transitioning into his income Sig plan. And if I show year to date, it's down about 1.3%. All right, so now let me show you my portfolio with exactly what I'm holding and what my strategy is. So this is my Bridge Money account. That's what I call it. It's my taxable brokerage account. But my Roth IRA and Mindy's Roth IRA are following the same exact strategy. I have this broken down into 3 legs. So we have the high yield leg, stable yield leg, and the aggressive leg. Jason Kelly doesn't call his 3 things the same as I do. This is just what I call them. But in his version of his income Sig plan, he has the base allocation with the aggressive one at 30%, and then the stable yield one at also 30%, and then the high yield one at 40%. I've reduced the aggressive from 30% down to 10%, and then I took the extra 10% and added it to stable yield, and another extra 10% added that to high yield. What I'm going for with this strategy is basically to replicate the stance that you would get aggressiveness wise if you were looking at like a 60-40 portfolio, 60% in bonds, 40% in stocks, but with a much higher income yield, dividend yield you might call it, just to show you what I'm looking at with my dividend yield of 7.57% with my current portfolio allocation compared to VT, which is Vanguard's Total World Stock Market ETF, has a dividend yield of 1.77%. AOR is an ETF that replicates a traditional 60-40 stock bond portfolio with a dividend yield of 1.83%. This is to show you what it would look like over the next 12 months for the dividends I'm expecting, with a total income expected of $13,142.33. This is just coming from my Bridge portfolio. Average monthly income of just under $1,100. As the dividends come into this account, I will have them rolling into the pie, and M1 automatically invests them in the proportion to which it needs to bring it up to the target that I've set, the target percentage allocation that I've set. That's one of the reasons why I like working with M1. At a certain point in my retirement, when I need to start taking the income, then I can let the dividends roll directly into my checking account as opposed to being reinvested. But for now, they are being reinvested. So Here are the exact holdings of what I have. In the aggressive leg, which is 10% of the portfolio, that's in TQQQ, which is a 3x leveraged ETF that follows the NASDAQ 100 stocks. In the high yield portion, that's where I have 50% of the portfolio. That's in GPIQ. It's an ETF run by Goldman Sachs, where they are taking the NASDAQ 100 and selling covered calls on those stocks. It's similar to investing in stocks, but giving it a little bit more of a cushion. It gives it more income. It does limit my upside though, because it is selling the calls. And then in my stable yield fund, that's divided into 50% in PYLD and 50% into SCYB. These are both bond funds that sell calls on the bonds. PYLD is managed by PIMCO and SCYB is managed by Schwab. I hope you enjoyed today's net worth update, and I hope that you understand my investing plan. If you have any questions, please let me know, and I'll be doing this update every month on the 1st. The numbers from the actual update are from March 1st, and I'm recording this on March 3rd. And until next time, let's continue to drive towards financial freedom.